let's get back to our main story. And that, of course, is the mega cap tech earnings that started today. Bryn Talkington, you own Microsoft. You own the Qs. You worried?
No, the time to be worried was, at the end of last year. I actually wrote an op-ed for you guys talking about the last 10 years. The Qs have done 20% a year. You have to digest that. I think tech is going to continue to be under pressure. I do think this year is going to be a good year for accumulating tech names. And so I'm not adding to my position yet, but I think we'll look back a couple years from now and say 2022 was a good accumulation year for some of these names. I think in May and June are going to be that good sweet spot, once we've gotten past some of these Fed hikes.
Now, I've heard you before on other stocks, Dan, suggest, such and such name is a quote-unquote table pounder. I don't hear you saying that about these names today.
Look, I think you have to, in the context of the broader market, as she was talking about, this is going to be ultimately valuations that I believe uptick throughout the rest of the year. I believe you look at the growth, you look at what you see from Microsoft and overall cloud. I mean, Scott, I view it still, tech stocks here as oversold as I've seen in the last 6 years. We continue to be bullish, and I think these numbers, once we get through this Fed cycle, I do still believe they're table pounders, and I just think it's one that in a risk-off market, they continue to be on the outs.
All right, this is a very important report that doesn't get its due the way that it used to, really, or the way at least that people think about it. And maybe they should. It's Texas Instruments, which we're showing you right now. The fact that their chips are in so many different businesses, from autos to industrials, et cetera, really across the spectrum. You can see that stock is down about 6 1/3%. The revenues there beat. Let's take a look at the EPS, which I don't see on my screen right now, but we'll take a look there. But obviously the street has some questions about this. The chip space, their EPS was $2.35 a share. You could already know that the street was worried about the chip space. As much as the chips had fallen lately, this was an area of concern if you think the economy is slowing and that a number of businesses across the space are going to have their demand go down. This is an area that you should look at, a stock like TXN.
Well, also the supply chain, right? I mean, if you look at semis right now, it continues to be probably as nervous as I've seen in terms of semis in a number of years. If you look at this number, definitely going to pour gasoline on the fire in terms of, worries around the semi sector. And I think you ultimately could see over the coming days more of a sell-off here because of these numbers.
Brian Belsky, it's the guidance that is the issue here. Their guidance was weak. Aren't you alarmed by that, as bullish as you are? You have one of the highest targets on the S&P for the end of the year, and I can't remember, is it 5,300?
It is 5,300. So just listening to all of this just reminds me that there's 4 types of tech stocks, right? It's the secular growers, the structural growers, the defensive growers, and then the high multiple names with not a lot of free cash flow. I think those are the names that are going to continue to suffer for as much as 2 or 3 more years, where the secular growers, like we're hearing from today, Microsoft in particular, Apple, Amazon, are going to be the ones that kind of get us out of this. The structural growers have had more problems in terms of growth, more particular with respect to guidance, Scott. But Texas Instruments is a defensive grower. It pays a big dividend. I think it's being unjustly kind of thrown into the rest of the chips that have not been able to create good guidance. And Dan put it best with respect to supply chains. But I think on these weakening days, this is when you want to add to those big dividend growers in tech, and you certainly want to add to the big secular growers. So, no, we maintain our longer-term bullish stance on these bigger tech stocks.
But, I mean, in terms of the market overall, right, if this is the demand issue, and I have to read through the exact guidance and get some of the commentary of what they're saying and then listen to the conference call, of course, but if it's a demand issue, as I mentioned at the very top, as many products and things that Texas Instruments chips are in, if they are guiding to a point where the market doesn't love it, if you have a market already worried about a slowdown, don't you have a broader issue that I feel like in some respects you're ignoring?
No, I'm not ignoring it. In fact, listen, I think that I know that we're in a stock picker's market. You need to be delineating this, and you can't throw all stocks into one basket. And I do think they're going to have certain chips that do very well. And most of the chips are down today. And so the market was not showing any discrimination. And so they were selling everything off. So, again, I'm not ignoring it. I think guidance is going to be defensive now because you can do the supply chain blame game. The Fed's going to raise rates twice, 50 and 50, and then we'll see. I still think the second half of the year is going to be bang on earnings, and they're going to be up a lot more than people think.